Welcome back to Everyday Explained. Today, we're breaking down something most people receive regularly but rarely understand: the pay stub. By the end of this video, you'll know how to read every section, spot mistakes, and use this information to protect your income and plan smarter. A pay stub is not just a receipt for your wages. It is a financial record that shows how your earnings are calculated, what is deducted, and what actually reaches your bank account. Understanding it gives you leverage. Errors happen more often than people expect, and many go unnoticed simply because workers never review the details line by line. Start at the top. This section identifies you and your employer. Check your name, address, pay period dates, and employee ID. If the pay period is wrong, everything below it may also be wrong. A common issue is missing overtime or hours worked outside the listed dates, which can signal a payroll timing or reporting error. Next is gross pay. This is your total earnings before anything is taken out. If you are hourly, multiply your hourly rate by your hours worked and compare it to the figure shown. If you are salaried, divide your annual salary by the number of pay periods. If the numbers don't match, flag it immediately. Overtime and premium pay are often listed separately. Overtime is usually paid at 1.5 times your regular rate, but rules vary by region and job type. Check that overtime hours are counted correctly and paid at the correct rate. Misclassified overtime is one of the most common payroll mistakes worldwide. Some pay stubs include bonuses, commissions, or shift differentials. These should be clearly labeled. If a bonus seems smaller than expected, remember that bonuses are often taxed at higher withholding rates. The gross amount should still match what was promised, even if the net amount feels lower than anticipated. Now look at statutory deductions. These include income tax, pension contributions, and employment insurance or Social Security. While you can't change these directly, you can verify they make sense. Sudden spikes may indicate a tax bracket adjustment or incorrect tax code, which you can usually correct through payroll or tax forms. Voluntary deductions come next. These might include health insurance, retirement savings, union dues, or wage garnishments. Confirm that each deduction is something you agreed to. If an old benefit appears after you canceled it, that is a fixable payroll error. Keep enrollment confirmations for reference. Net pay is what actually lands in your account. Before assuming an issue, add up all deductions and subtract them from gross pay to confirm the math. Many people skip this step. A simple calculator check can quickly tell you whether the problem is a misunderstanding or an actual payroll mistake. Year-to-date totals are one of the most useful but ignored sections. These figures show how much you've earned and paid in taxes so far this year. Compare them with your own records. This helps you anticipate tax refunds or balances owed long before tax season arrives, reducing surprises. Pay stubs also reveal patterns. If deductions steadily rise while your pay stays flat, inflation-adjusted income may be shrinking. This information can support requests for raises or help you reassess benefits. Treat your pay stub as trend data, not just a single document. If something looks wrong, act quickly. Payroll errors are easiest to fix within the same pay cycle. Take screenshots, write down discrepancies, and contact payroll in writing. Be specific. Vague complaints delay resolution, while clear calculations speed it up. Keep your pay stubs, even digital ones. They are proof of income for loans, rentals, disputes, and tax audits. Create a folder and store them by year. This habit takes minutes but can save hours or days of stress later. Independent contractors and gig workers receive different documents, but the logic is similar. Track gross earnings, deductions, and net income yourself. Since taxes aren't withheld automatically, your pay stub equivalent is your invoice and payment record. Treat it with the same scrutiny. Use your pay stub to budget realistically. Base your monthly expenses on net pay, not gross. Gross income looks better on paper, but net pay is your true spending power. This small shift prevents overspending and reduces reliance on credit. Pay stubs can also expose compliance issues. Missing overtime, Unpaid breaks or inconsistent hours may violate labor laws. Knowing what your stub should show helps you recognize when something isn't just unfair, but unlawful. If you don't understand a line item, ask. Payroll terminology varies by employer and region. There is no universal format. Request explanations in plain language. A legitimate payroll department expects questions and should be able to explain every line without hesitation. Understanding your pay stub turns passive income into managed income. You stop guessing and start verifying. This knowledge compounds over time, protecting you from small errors that quietly add up to significant losses. Thanks for tuning in to Everyday Explained. Your pay stub is more than paperwork. It's a tool. Read it, question it, and use it. Small checks create long-term financial clarity. If this guide helped, consider subscribing, and we'll see you in the next one.